So the VIX has surged higher into the end of August 2022. So here's what's ahead for September, looking at this fear gauge of the markets. Now, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. Now, here's a quick reminder, if you didn't know already, of what the VIX is, okay? It is the CBOE Volatility Index, and it's measuring the dispersion of returns related to the S&P 500. So what this is saying is the higher the volatility that's present in the market at any given time, the higher the risk to trade. And therefore, it ends up being a gauge of fear in the market, again, based on the price inputs of these S&P 500 futures index options. So it's known as this fear gauge, this fear index, and it can be traded directly as well. So I have a lot of traders in the HEMA Ready tribe that trade using my trifecta of price, time, and momentum, either markets that are closely tied to how the VIX is behaving, like the SPY ETF, or trade the VIX itself. Or you trade options, which are very much correlated to and affected by what's going on with the VIX. So I'm going to take you over to my TradeStation charts, and we're going to just pull up the charts as per the last time I shared them in a chart of the week or hot charts update like this. So right now you can see on my charts the weekly chart of the VIX. And so that means that every one of these candlesticks, these green or red bars, is representing 1 week of price action. Now, you can see that the most recent candle, it's not complete yet because we are here on a Wednesday, so the middle of a weekly bar being formed. And notice though, it came up to 27.76. Specifically, it came to 27.69, okay? Just 0.07 away from that resistance area, and it started to back off. So if the VIX is backing off, okay, if the VIX is starting to go lower, that's usually a good sign for the broad market. And again, the broad market, especially the S&P, have taken a hit these past few days, coming to the end of the month, end of the summer, and more. So before we go to the daily chart to get a more specific, honed-in analysis, I also want to bring your attention to these two trend lines that are on this weekly chart. We have one that's rising off lows from December 2021 and November 2021, and then one that's falling off of highs. So trend lines are essentially dynamic, changing resistance and support levels in a market. And the way that I use them is a little bit different. It's a little bit more organified, if you will. And so those lines will continue to be helpful to me no matter which direction the VIX moves in. So now I'm going to bring you over to the daily chart. So here's my daily chart of the VIX. Again, untouched, no more analysis completed on this particular chart since the last time I shared it with my tribe. So I'm going to go ahead and complete and do the current analysis now. So you can see that there were some recent forecasts here, the most recent being for a key timing point in August, specifically August 4th. And the market actually continued to trade lower past that point. You can also see those two trend lines that I pointed out on the weekly chart now represented on the daily chart. And I'm going to thicken up the lines a bit so they'll be easier to see versus these other levels on the chart. Now, most recently, we came up through 25.31, which was an important level. And remember, on the weekly chart, there was a level I noted. I'll bring that in here. So here we are back with that weekly chart level now translated over to the daily chart, and it's 27.76. So since approaching that level in the past couple days, two things have happened. One, we have had the formation of a unique type of candlestick. It's one that I dive into in my Gann candlesticks techniques. And it is suggesting that there is an expansion of indecision by the traders involved in the VIX here. When there's a lot of indecision, a lot of sort of back and forth, that usually coincides with turning points. So if we've been rising into this action, it gives more room for us to be falling from this action, which would mean recovering higher in the broad market. The other key element here is that my favorite momentum indicator, which is plotted down below, that's the RSI power zones, is showing a return to the bear resistance power zone. Now, the last time momentum came all the way up from oversold levels to the bear resistance power zone and then formed a significant actual swing high was here in June, mid-June. Notice that's about the same time that we had the low in the market. See, the VIX and then the broad market action are going to have very similar correlations of dates. But check this out. The VIX peaked on June 13th. Whereas you look at the chart of the E-mini S&P 500 futures, which is my main market I trade relating to S&P 500, the low actually came in 3 days later on June 16th. So that means the VIX, if studied properly, can give you a heads up on price, just like momentum, the RSI power zones can. Okay, so with this information, right, the observation of stopping at this 2776 resistance level, the Gann candle, the return to the bear resistance power zone of the RSI, what is likely up ahead? Well, here's a couple things to look at. Even if the VIX moves lower from here, we need to see it get down below 2313, and more importantly, down below this 2167 level. So there's a sandwich of support here on the VIX. When I say support on the VIX, it would mean resistance on the broad market chart. Also notice that this little sandwich of support is currently including the dynamic support coming off of that green trend line. All right, now if the VIX moves higher from current levels, if it doesn't turn lower as the current evidence I just noted would indicate, then there's a couple levels to watch out for. The next one being at 2906, and then beyond that, very close by, at 3022. If the VIX is able to push above those levels, there's still resistance up ahead at 3129, and 3129 is the most significant of those levels that are shown here after 2776. So when it comes to support and resistance, guys, there's levels that are more important, have more weight, and ones that are lower kind of weight in between. So 2776, because it was calculated from a weekly chart, is very important. 2906, 3222, those are resistance levels, but not as powerful. The next most powerful being 3129. And this gives you a lay of the land for the VIX now, okay? We can't know which direction it's going to turn, but we can follow. We can, like a surfer finding a good wave, we can take action after we see the evidence suggesting that there's going to be either a turn lower in the VIX, which I think is more likely, allowing for some broad market recovery as we kick off September, as opposed to the VIX continuing significantly higher, meaning we would extend this late August weakness into September. Now, if you would like to know more about how this will unfold beyond the first few days of September, then be sure to come back to my channel and stay tuned on any VIX market updates I do. Join my tribe if you haven't already, and be sure to consider the Skinny in the Markets, which is where I actually provide the most up-to-date, most detailed analysis on the broad market by studying the E-mini S&P 500 futures, the NASDAQ E-mini, and providing stock picks. Right? So remember to subscribe, like, comment down below, follow, and again, join my tribe if you haven't already, and I'll catch you on the inside. You can sign up in the link to join my tribe and get my hot, timely, actionable updates as soon as I publish right to your inbox.